Hey, Kevin here, top 1 financial advisor and best-selling author, and we are here to talk about the stock market because today was a day. It was quite interesting. There were a lot of swings that happened. At one point, my entire text thread was like, "Oh my God, look at the market, it's bloody," and then it got quiet. And I'm like, what happened? So I'll go and look at my phone after the market closed, and the S&P 500 was up, and the NASDAQ was up, and the Dow was down. So for those that don't know, the Dow's pretty much the 30 most popular, the 30 biggest companies in the US, which is not really the best measure of how the stock market is doing, but that was down. Whereas the S&P 500, the 500 largest companies, they were up. NASDAQ, mostly tech companies, they were up. That wasn't the case, this morning, and it definitely wasn't the case around lunchtime. But things definitely took a swing. So what happened? Why did it happen, and what did it mean for you as an investor? So there were two major events. One we expected, one I did not expect, that did have an impact on the market. So first, the first alert I got, I told y'all CNBC, Yahoo Finance, you want to tune into those alerts to help you learn more about the market. So the first thing that popped up was a report on retail spending. What we expected people, remember I have been big on this. In October and parts of November, we knew that people were spending record amount of money on retail stuff, so shopping for the holidays. Now, what I'm thinking now is most people were probably shopping earlier due to the supply chain, but we found out in December those sales dropped just a bit, which is not good for a company like a Bath and Body Works or a Target or Walmart and Amazon and companies in that particular space. So keep an eye on that. I'm interested to see how Target does when they report earnings and other things down the line, because that was supposed to be, I thought, a easy money, right? In October it was, because that's what the reports were saying. So that was one thing that was like, oh, didn't expect that to happen. And then things got a little bit worse, or no, they got a lot worse when JPMorgan and Citi reported. Now, we did expect them to report earnings. Anytime companies report earnings, things can get a little weird. Financially, they were doing fine. Both them and Citi actually did quite well. They beat estimates in some cases. When we say earnings, it's like, hey, we expect you to do this. How much money did you make, and how did you compare to what we expected? JPMorgan said, here are the numbers, and things were actually fine. What wasn't fine was inflation, but not the inflation that most people were thinking about. The CEO and the CFO of JPMorgan said, look, wage inflation is what hurt us, meaning the money that we are paying people who work here have gone up a little bit more than what we expected, and we expect this to continue at least until 2023, or really said the next 2 years. It could go into 2023. So I'm assuming maybe 2021, 2022, 2023. So they were like, look, we were paying people more. That's what happened. Now, personally, I don't mind them paying people more money. I'm for us. So if you work at JPMorgan, get your money. But there is a delineation I think you should make. So remember, when I said this when we talked about JPMorgan versus Ally. Now, I assumed that because a JPMorgan, a Morgan Stanley, a JPMorgan, a Goldman Sachs, and a Citigroup, they have different business lines and revenue streams. And what they're saying is they pay their professional classes. I'm not sure how I feel about the term, but in any case, the bankers, the investment bankers, the asset managers, people who put together the ETFs and the financial advisors, those are the areas where they pay people more money, which is, those jobs are a lot more complex, but not every bank has those industries in it. And Ally doesn't really do a lot of that type of bank. They don't do a lot of M&A deals, mergers and acquisitions. They don't do a lot of IPO business, stuff like that. So Ally might be okay. They also don't own any branches. Ally might be okay. A Capital One, I'm hoping, is going to be okay and kind of escape that part of it. Interestingly enough, a lot of those companies failed. JP Morgan dropped 6% today. Wells Fargo was up. And a part of it is because they don't do the exact same type of business as the others did. So Wells Fargo was one of the few companies that, oh look, banking is down, Wells Fargo was up. I don't own Wells Fargo, I don't like Wells Fargo. It's a video for another day. However, that did occur, and it's important to, as you're looking into the banking space, you might want to make that distinction. I thought, and this is why you want to read these reports, right? I thought that a Goldman Sachs would have been fine because they're pulling in, they're getting the bank money plus M&A money. They're getting the bank money plus IPO money, and they should have been fine with what I expected. I did not expect wage inflation to be, or not with a Goldman Sachs, but more so a JPMorgan. I did not expect that to be the case. But now that it is, when Goldman Sachs reports, when these other larger banks report, when Bank of America reports, when Morgan Stanley reports, I expect to see the same types of themes. We will see. But that is why this was an important week, because this gives me an indication of, once I read more about Morgan Stanley, I keep saying Morgan Stanley, once I read more about JP Morgan and Citigroup, it might give me some more information about the other banks and how to proceed for the rest of the quarter, or how to proceed into the summer. Now, historically, this is still a solid place to invest based on the expectation of rising interest rates. This means that if I'm charging 1% on a mortgage loan, which is unrealistic, but just work with me here. If we're charging 1% on a mortgage loan and the Federal Reserve raises interest rates and now have to charge 2%, 3%, 4%, if that's the case, then I as a bank make more money. That's going to make me look even better on paper. That is a thought. And that is why banking is still a solid sector. So this could be, if you continue your research and read into JP Morgan and others, this could be a great avenue where you say, okay, well, what banks are putting out the best mortgages and the most, and who's really good at it. This might be an opportunity to jump into those. I think this makes regional banks and smaller banks become a lot better off, because they don't have that they shouldn't have, rather, that wage inflation pressure, because they're not paying, high fancy investment banker guy. They're not paying those dudes, because they don't do that kind of stuff. So they may have fared out pretty well, which is not my premise or my thought going into it. It is one of the reasons why I did keep Capital One. I'm glad I didn't flip it for another company, but we'll see. Capital One was down today. I'm interested to see what they were going to report and see how things go throughout the summer. The other thing too is you don't necessarily want to react right now. This is not time to panic. We are only 10 trading days into the new year, and Monday is not one of those days. Monday the market is closed. Just throwing it out there so that you know, so you don't get up on Monday, wake up and try and do something. You can't do nothing. So telling you now. But that's the case. So read. This is your time to read. You got an extra day where the market is not moving, to read more into what happened with JP Morgan, read more into what happened to Citigroup, and continue to read, because next week is going to be a very busy week too. So keep your eye out on what's going on in the banking sector. Keep your eye out on what's going on in the retail sector. These sectors do matter, but also remember that these sectors were for what happened at the end of last year. It's not, here's what's happening right now. They take the last quarter and report what happened in the last quarter, and you can take that and see how things are expected to go forward. So that is the thing. We're looking forward. Today it dropped. For some people, this is a buying opportunity if you really believed in JP Morgan. It's a 6% discount. JP Morgan they're not going bankrupt. But I would expect them to, I still think they'll do fine. It's only 10 trading days into the new year. So we'll see how things progress and continue. But my big thing is I want to see how these banks fare out on their earnings report. So I'll be keeping a strong eye on Ally. Obviously, I'm going to be keeping a strong eye on Capital One, because those are different than the Morgan Stanleys and the other, more investment heavy banks. So we'll see how things play out there. We'll talk more about retail sales. We'll talk more about REITs and what we're expecting for this year. Continue to exercise patience. Continue to exercise, just relaxation and letting things fare out. Because remember, this right now has been a little rocky. 2022 has been a little rocky. Some things did not play out as we expected to for 2022. That's fine. Remember, you were in this exact same spot in October. I think it was September, October, and parts of November, where things were really rocky. The market was falling. People were panicking. And then December came and we start hitting, all-time highs over and over and over again. Remember that. Okay, so this is one of those times where I'm not panicking in the least bit. If anything, we'll make some adjustments come June. Okay, remember, remain calm. 10 days is not going to dictate the rest of the year. 10 days is not going to dictate the next 10 years. We allow things to happen. We learn. We see what tweaks need to be made. But this is not enough time at all to determine what's going to happen in 2022, and it does not shake what has been true for decades. Banks, real estate, which we'll talk about, consumer staples, those are, and healthcare. Those are the places that tend to do well when inflation is high, which it is, and when interest rates go up, which we do expect that to happen. So we'll see if those things continue to happen this year. Exercise patience. The same way we talked about the infrastructure bill, we were talking about that in April of last year, and it finally came through like September or whatever that was. That was a long time. That's a long time. It's going to be a long year, which is good, because if the year ended today, it would not be great. So allow time for things to breathe. Read, research, continue watching these videos. You are going to be okay. All right, that is it for me. I'll talk to you guys later. Bye.